What I have said is we're going to have more bear markets. We've always had bear markets. Now, in Washington, they say, no, we're not. Everything is okay now. No more bear market. If you believe them, don't listen to me. But I know more bear markets are coming. And what I have said is the next one is going to be the worst in my lifetime. Maybe we're in the minute now. I don't know. 2008, we had a problem of too much debt. Since 2008, the debt, oh my God, look out the window. The debt is skyrocketing everywhere. So the next bear market has to be horrible.
Well, assuming we're in one right now, and we know that the S&P 500 is already down 20%, so sure looks like we are. The ones that you have referred to as being the worst in your lifetime, the S&P fell by at least 50%. So by that calculation, we still have at least another 30% to go down here.
But before this bear market is over, of course, many stocks are going to go down 70, 80, 90%. That's the way bear markets work. No, of course that's going to happen. I just don't know when it is.
So it's going to be worse because we have even more debt in the system.
First of all, it's been 13 years since we've had big problems. And that's the longest in American history. Could go for 30 years. Who knows? Who knows? But it's already overdue on a historic basis. And it's very, very expensive. And it always goes down a lot when it goes down. We have very high valuations. We have staggering debt. We have a lot of new investors coming in.
I'm not sure Washington disputes that we're in a bear market. Hard to dispute that when the S&P 500 is down 20%. So by technical definition, we're in a bear market. But I do get your point that many in Washington aren't acknowledging that we're in a recession. Although we may very well already be in one. Second quarter GDP estimates expected to be negative. So then again, by the technical definition, 2 quarters of negative growth, we are in a recession. But to your point, many in Washington haven't quite come to terms with that or admitted that. But what is your outlook at large, especially as the Fed tightens more aggressively?
Washington has said we're not in a recession. When we were, they didn't even know it, that the recession had started. And likewise, central bank people. My outlook is, if we have peace, there's a lot of pessimism around right now, huge amounts of pessimism. Whenever there's a lot of pessimism, it often leads to a rally. If something happens in Ukraine, there'll be a big rally. Oil will go down, grains will go down, stocks and everything will go up for a while. I don't know what will cause the rally, but we're probably going to have a big rally. That rally is, I hope I'm smart enough to sell that rally, because that's probably the last big rally. It could be a very big rally, but that's probably the last time.
And that would or could be triggered by a resolution to the conflict in the war in Ukraine, is what you could see as the possible trigger for a rally.
Obvious for me would be if something happens in Ukraine. I have no idea. I don't have any inside information, but if something happens, that would cause a big rally.
You're saying we're currently in a bear market, but not necessarily the one that you anticipate will be the worst in your lifetime.
I have seen some astonishing bear markets, not just in the US, all over the world.
But you don't think that we're in the beginning of the worst bear market of your lifetime?
If you want to define it that way, yes. But if there were peace, we might make new highs. But still, that would not negate the bear market.
So we're in a bear market. We could still see a rally on positive diplomatic developments out of Russia and Ukraine. But ultimately, we're still owed another huge bear market worse than anything we've seen before, even if it's not this one, if I may recap.
You know what the debt has happened? I mean, the US has increased its debt by several times since 2009. Japan, oh my God, they can't even count the debt in Japan. Many countries in the world. The debt just goes higher and higher and higher. 2008 was because of too much debt. It's much worse now.
What is it going to take to tame this inflation?
They don't know how to fix it. 1980, interest rates on treasury bills, US treasury bills, were over 20%. That's not a typo. 20%. It cured inflation. It solved the problem finally. No, because we've made so many mistakes this time around. Interest rates will have to go very, very high. We will have a serious recession. Many people will go bankrupt. We're going to have a lot of problems. There's no other way to solve the problem. We have a choice. We either raise interest rates a lot and have a lot of pain, or we let people continue to print money and have horrible, horrible inflation and cause even more pain. There's not many choices.
They're saying that if you take a supply side economic approach and you cut taxes, for example, that we could get out of the situation without a recession, or certainly not one as ugly as would need to be to tame interest rates by just increasing, to tame inflation by just increasing interest rates.
I am all for cutting taxes. It's always better for any country, any economy. The fewer taxes, the better. If we cut taxes, we're going to have big push into the economy. But while these guys are printing money, it's just going to make inflation worse. I don't know how we solve the problem of too much inflation without pain.
What can an investor do in this environment?
Well, first of all, investors should only invest in what they themselves know a lot about. They shouldn't listen to hot tips on TV, even on Kitco News. That's a terrible way to invest. Stay with what you know. I can tell you some of the things I'm doing. When you have inflation, if you own the things that go up in price, you make money. I mean, agricultural goods are going to go higher before this is over. Energy will go higher before it's over. Everything will go higher before it's over. Real goods. If you own those kind of things, you will do well. If you know how to sell short, then you can sell short many things, many stocks, not just in America, all over the world, and make a lot of money. If you don't know how to do either of those, put your money in the bank and wait. It's better to earn 1% per year than to lose 20% per year, and bear markets lead to big losses.
Can you stay in cash in such an inflationary environment?
The interest rates will go high enough. One thing about interest rates, in inflation, they will eventually go high enough to offset the effects of inflation.
In terms of the outlook of the IMF, the International Monetary Fund, they think that inflation globally will likely be tamed by next year when rate hikes start to work. The IMF saying that global interest rates will keep rising until 2023, and then heated prices will begin to cool in response to actions from central banks. Do you agree?
I've been investing a long time. I have never known the IMF to be fighting about anything. I don't even bother. I mean, the best thing we could all do is abolish the IMF. We're not. Because there are too many people who make money off the IMF. They've never been right about anything.
Bitcoin, not quite that low, but is on sale, 70% down from its all-time high. Would you buy Bitcoin now?
No. What I said was, I wish I had bought Bitcoin at $1 or $5. I wish I'd bought IBM in 1914. I wish I'd done a lot of things. I wish I'd bought Amazon at $1. No, all I said was, I wish.
Okay. Is there a level that you would buy Bitcoin at?
There's no level at which I would buy those cryptocurrencies unless something dramatic changes. No, the answer is no. Bitcoin is wonderful for people who buy it and sell it and trade it. I know people who are having fun trading it. Nothing wrong with that. But if it ever becomes successful as currency, which they say it will, no government's going to allow that. No government wants to lose its control. They all love their monopoly. They're not going to give up their monopoly. I wish they would, but they aren't.
Why are we seeing a sell-off in agriculture now?
Nothing goes straight up or straight down. Things go up like this. There are always corrections along the way, and maybe there's something else going on, but in my experience, corrections are normal and common. They happen all the time.
Is investing in agriculture still a wise move if you're trying to hedge it against this current inflation?
My answer is yes, but my plan is if there's peace in Ukraine, agriculture is going to go down. All grain prices are going to go down for a while, and that's the time to buy.
We have the dollar performing incredibly well, stronger than the euro at the moment. Why is that?
Well, I own a lot of US dollars, as we've discussed before. The reason I own them, not because it's a sound currency, it's a disaster.